Welcome back to Kiwoon Learning. I'm Caleb, and today we'll be going over Visa, undeniably one of the most dependable and well-performing stocks over the past 10 years. From the lows of 2008 to today, the stock is up over 1,500%, and even through pullbacks, they've given investors very consistent gains throughout history. Now the question holds, with Visa's 10% pullback, is right now a good time to buy? In this video, I'll be breaking down Visa's business model and going over the key factors like fundamentals, growth, and profitability, while also going over why Visa stock may be completely overvalued. Now let's get right into it. Before we get into the fundamentals of the company, we need to understand how Visa actually makes its profits. They do this by selling services as middleman between financial institutions and merchants. They essentially have the four-party payment model. They do this by collecting fees and taking tiny slivers out of each transaction. There are also service revenues, which is a very special type of revenue because it's built in to hedge against inflation. If the cost of widgets rises due to consumer inflation, Visa's revenue will automatically grow right along with it. This is extremely helpful during times like now, with inflation the highest it's been in the past 30 years. Visa also makes a lot of money through its data processing revenues. This actually makes up over 50% of their annual revenue. The majority of this comes from maintenance fees and is on the number of transactions that happen. The last main way Visa makes money is through international transaction revenues. This makes up 25% of total revenue, and these fees are especially sensitive to economic downturns across the world. For example, when COVID hit, there were a lot less international transactions, and Visa actually lost over 30% in their international revenues during the height of the shutdown. And using Chartmill, we can actually see that some of Visa's main positives in terms of fundamentals is that their cash flows are sufficiently covering interest payments, as well as a large portion of their market sector and a high return on equity over the past decade. The fundamental score that I would give Visa is a 5 out of 10, because although they have an extremely profitable company, when posting a profit margin of over 50% and a return on equity of over 30%, when we want a range of only 15 to 20, they have actual terrible fundamental numbers. But hear me out. Visa is trading from very high revenue valuation multiple. Although their price to earnings is relatively fair, their price to earnings to growth, PEG ratio, is 2 times higher than the industry average. I think if you take into account everything, they only check one of the 6 fundamental pillars according to valuation. While they're decent in terms of health and past numbers, their price to sales model on Finbacks actually shows a current 22% decrease from their current stock price at a price target of 167. So if you're a fundamental trader, I'd really be looking for a larger pullback for Visa to even be considered a buy. I currently would be looking to put it on your watch list and see what happens. Critics will say that if we take into account the company's potential growth and consistency in profitability over the past 10 years, then they would see Visa as a hold or even a potential buy. And I do think Visa is a very solid dividend stock that would not be going anywhere anytime soon. But a lot of major names are moving away, which could lead to them losing a large share of the market sector. Companies like Amazon have stated that they'll stop accepting Visa credit cards in the UK to avoid transactions on January 19th of this year, and this may just be the beginning. If Amazon feels that the profitability is still there without a middleman like Visa, they could stop accepting Visa credit cards throughout the entire world. This could be potentially devastating for Visa and create a domino effect in the future with other large companies. Visa has also had a lot of large institutional selling. While over 500,000 shares have been sold in the past 12 months, only 28,000 have been bought back. To put this into perspective, on a cost end basis of $220, roughly $110 million has been sold by insider traders, while only $6 million has been bought back. And while insider trading and insider selling doesn't directly mean terrible news, I just believe that this ratio of $110 million to $6 million of selling and buying back just cannot be ignored. With all this being said, I would keep Visa on your watch list or maybe even SL at this point in time, but it is probably safer that you invest in mutual funds like the SPY or VTI that will just move with the overall market. And although I think concerns with the e-commerce giant like Amazon may just be the beginning, they have been extremely consistent so far. So I guess time will tell. But yeah, that's basically all I have. I know the stock is controversial in terms of selling due to their consistency, but I just want to let holders and potential holders of Visa stock know what is going on with Visa and how their business has been impacted by a pandemic. Hope you guys have a great rest of your day, and I know it's a little bit late, but Happy New Year. Peace.